So in this video we are going to see about the distribution in a private equity fund and its impact on the financial statements. Let's assume a fund is distributing an amount of 1000 and the fund is telling, right, I will pay a cash of 800 and I'm just holding a distribution for one particular investor, remaining I have paid. And since one investor has contributed in kind, I'm just paying the distribution also in kind to that particular investor. Okay, right. So now let's see the distribution journal entries. Generally, if there is no distribution payables or investment in kind, it's just kind of an your distribution capital distribution account, which is your capital account, will be debited and your cash account will be credited. But in our scenario, there is a capital distribution payable also for 100 and investment in kind. That means the payment of distribution is in kind. So we have investment in kind for 100. So this is the journal entry. Your capital distribution account will be debited for 1000 and your cash account will be credited for 800 and your capital distribution payables will be credited for 100 and your investment in kind will be credited for 100. And if you see these two transactions, your capital distribution payables and investment in kind, they are not having any kind of cash impact. So these things, right, it should be kind of so these things are not shown in the cash flow statement, and the only the cash impacting transactions are shown in the cash flow statement. So the payment of distribution is 800, it's getting reflected over here, and your net cash used in financing activities is 800. So all the non-cash impacting transactions are eliminated in the cash flow transactions. Their impacts are eliminated in the cash flow transactions. So in the supplemental disclosure, you will be able to find these two things, right? And capital distribution payable of 100 and your investment in kind of 100. Since we are not showing these two things in the cash flow statement, right, but it is mandatory for the investors to know about these things, so we are showing it as an supplemental disclosure. And in the statement of change in partners capital, it is just kind of an your balance sheet, right, and whatever the distribution we have done, right, that will get reflected in negative because cash is going out, your capital is reducing. And in the statement of assets and liabilities, right, and your investment side will get reduced by 100 and your cash will get increased because the cash will also get reduced by 800 and your capital distribution payables will get increased by 100. And as we seen in the prior videos, right, whatever the partners capital, that will come as a partners capital in the statement of assets and liabilities. So this is 1000. If you add the liability side, right, your capital plus your liability, that comes up to 900. If this 100 and plus this 1000 will come up to 900 because the 1000 is a negative, and your investment plus your cash, this is also cash is also negative, right, so that comes up to 900. So your assets and liability side both are matching. So in the upcoming videos, right, and we will be seeing the net of distribution and net of contribution examples. Thank you.